Joining us now is Ben Emons, Managing Director of Global Macro Strategy at Medley Global Advisors. Ben, welcome back to the show. How do you position for it? Because the S&P 500 has actually done quite well during a period of multi-decade high in inflation. What stocks do you want to own?
Hey, Sarah. Yeah, you do want to start looking at, on one hand, stocks that have historically done well. If you look back in the 90s when we had this type of inflation rate, big conglomerates, if you think of an IBM, which has not done well at all over the last decade or so, but at that time did well. I guess really not as sensitive to inflation, including some of the telecom stocks, or what's doing really well currently are the automotive sector. If you think of the big names like Ford and GM. So as examples, right, there's a whole host of others. But if we're in an environment where inflation is now prominent, I think investors were going to get really focused on where is inflation directly impacting. I think that's more like the consumer side of the economy ultimately. So I think you want to stay away from that and be more focused on those who are less sensitive to inflation.
What about companies that is the strategy here companies that can pass on price increases to consumers? Because that's been a big theme for a while now. And a lot of these earnings reports have been scrutinized by that fact.
That's for sure. If you're in the position to do that, then obviously you're going to maintain your margin. But I think there's a certain limit to that, because ultimately if consumers walk away from seeing products being way overpriced and getting alternatives, then you cannot pass on forever. I do think, though, that if you think about the energy sector, which has been so leading, that's probably where the one is where the pass-through will continue, no matter what, because of the dependence on energy. I think that's where probably the other side of the inflation strategy, if you call it that way, you want to continue in the energy sector.
But Ben, what do you think about the US dollar at this stage? If inflation does continue to persist higher than expected, is that bullish for the dollar or not?
I think it's in two ways bullish, Wilfred. So, on the one hand, of course, a stronger dollar comes from, projection of rate hikes. If inflation continues to move higher, the market's going to continue to try to price in more rate hikes, and that will lift the dollar. On the other hand, inflation has also a level of uncertainty in the markets and uncertainty in the economy. That too can actually drive the dollar somewhat stronger. So it's really notable as we are here right now that we're breaking above that 95 on the dollar index. And we're following a bit of a similar pattern as back then in 2013-14 when we were tapering the first time. We got to watch the dollar breaking out, because it does indicate that there's going to be more momentum in the FX market, trying to price in more Fed tightening in a response to that higher inflation. So from that sense, the dollar has more upside from here.
I think your thesis on the low multiple companies, cheaper companies that do well during inflation is interesting. So you mentioned IBM. Other names that you would be looking at?
But there's a big group there, Sarah. But I think that if you think of the ones that you're posting there, they're low multiples because they've had really challenging fundamentals for a while now, including through the pandemic. And I think there too, to our previous discussion from the last one on the show, the airline sector continues to stand out that way too. There's actually low multiple stocks that have fuel hedges on already and can therefore continue to expand in multiples as, travel demand continues to come back, and irrespective of what inflation or energy does. Lastly, as everybody's been looking at, the value or the small cap sector, that too is a good sector to be in, because you don't really have a direct impact on inflation other than if it affects consumer sentiment, which is happening but not really deteriorating that sector. So I think small caps are here to stay too.
What about gold, Ben?
Another interesting dynamic, Wilfred. So gold last week broke out together with the dollar. Kind of unusual combination, really, because the interest rate accounted for inflation, the negative real interest rate is now so negative that gold typically would lift from that, but the dollar not. So I think gold is this other idea of, yes, it's a traditional inflation hedge. It has lagged the other commodities the entire year. It has lagged, obviously, a very popular Bitcoin. So it's probably in a position to have some opportunity here, but I wouldn't put all my eggs in that. Because really, I think this inflation is about the economy continuing to expand. It's not contracting or any kind of uncertainty situation. So gold has some upside, but I give the dollar more lift from here.